Hey, how's it going, everyone? And very happy Monday. So I want to go ahead and kick today's video off with a little bit of a reaction to this video that was uploaded several days ago on Fox Business Clips. It actually appeared on my YouTube recommended videos this morning. And there's a lot of relevant information in here, not to mention I talk about this information fairly often. So it's always good to really see pretty much the big players, whether it's CNBC, which I've reacted to before on videos, or Fox Business, or pretty much anywhere else, right? Then I really want to go ahead and talk about, or I should say a follow-on to a survey that is in this video. Then I also want to pretty much go over the cues and the spy of some similarities from last summer and where we might be going into the end of this year, and also when we might be seeing a very, very large buying opportunity, in my opinion. So let's go ahead and turn up your volume. If it's a little bit too low, I just checked the audio on this. Should be good, so let's go ahead and play this clip right here.
This morning we had an update at AAII, so we can see again that the bearishness outweighs bullishness there. Of course, you also talked about investors' intelligence. Why is it kind of a good thing when sentiment is still sort of iffy? Like not everyone's gung-ho bullish.
Well, Charles, we want to be a contrarian. So this is very similar to prior data points we've seen. Institutional investors are in. They are optimistic about this market. Retail investors are still not, they're still cautious. So I'm hearing that every day, and that as a contrarian is a good thing for the market to continue to move higher.
All right, let's talk about some stocks here. Microsoft is a
All right, so if you want to watch this entire clip, link will be down below in the description, but kind of really want to comment pretty much on what this person was saying, and also she's a big investor as well. And she basically pretty much said institutional investors very much in, retail is on the side. I talk about this survey actually fairly often. It's the AI Investor Sentiment Survey. I'll go ahead and post this link down below as well. Now, if you're new to the market, understand that these surveys are basically driven by algos. And basically, yes, when I say algos, I do mean bots. Very much sentiment coming from a lot of retail. I really feel that the AI Investor Sentiment Survey really mirrors pretty much retail investor traders, very much like myself. It doesn't necessarily really go on Wall Street's behalf per se. Yes, obviously Wall Street controls, along with institutions, they move the market, okay? Someone like me, someone else like retail, or even if all of retail were to get together, and for those of you that has been in the market for quite some time like me, GameStop 2021, yes, obviously GameStop was very much a powerful short squeeze out there, and retail very much benefited as well too. But it wasn't just retail that ultimately caused that. There was other several factors in play. Very different topic for a different video, but ultimately at the end of the day, this survey very much mirrors what retail is doing. And I highly doubt I have any big investors or Wall Streeters pretty much watching this fairly new YouTube channel. Welcome if you are new, by the way. I put out videos Monday through Friday here and educational content on the weekends. Today's kind of really a slow day per se in the market. It's just very much a technical analysis driven day, not really any big data pretty much being released. So I kind of really want to go off of very much pretty much a topic that I very do like to cover. But this link will be down below in the description. I talk about this a lot. AI Investor Sentiment Survey. This comes out every single Wednesday. So every single Wednesday, we basically get new data to see how much investors are feeling to be bullish, neutral, bearish. Now, full disclaimer for me, I am always a long-term bull on America. I'm an American patriot, love my country. I'm also a veteran as well too, USMC veteran. I'm always going to be long-term bullish on America. As for short-term, earlier this year, I was very bearish short term, which caused me to buy tens and tens and tens of thousands of dollars worth of stock publicly on this YouTube channel. Probably not going to get around to showing my public profile for today. Showed it in the last couple of my videos if you want to see it, but I'm very much a growth investor. And I will say that given the times in my life, especially the last several years, I've been short-term bearish, and those times have just been gigantic buying opportunities, which I very much came out swinging. A lot of times when people are short-term bearish, they don't get invested or they don't necessarily pull the trigger because a lot of scary stuff is happening, like the start of the Iran war earlier this year, which, yes, it is very scary, and let's keep good thoughts, good prayers to have that nonsense pretty much wrapped up soon, right? But this survey comes out every single Wednesday, and right now we're kind of really seeing numbers all over the place. I mean, if your job is to read data, which I can definitely say, I mean, part of my job is to very much read data because I want to say pretty much half of my annual income pretty much comes from the stock market. Very much grateful for being in the stock. I'm very much grateful that I can make money in the stock market. Words of motivation for anyone out there. Yes, you can break out of the financial matrix, especially doing your due diligence around stocks. Now, me reading this data and just looking at it, it's all over the place. I mean, you're not really seeing a clear trend. We can very much go back to, let's say, July 15th. July 15th, like you're talking about a month ago, look at the bullish sentiment, 44.9%. That's a pretty big number, right? But here's the remarkably interesting thing about this report of what it tells you. The neutral category is ultimately being moved kind of like the most here. As for the bearish category, you still have, like, the bears are still bears, and understand that there's really never going to be a time where you pretty much have, like, zero in one direction. You will always have people be bearish, you will always have people be neutral, and you will always have people be bullish overall. But I mean, there's never going to be a time where this, like, sentiment is zero bearish, zero neutral. If that theoretically was, we're in a gigantic melt up. Like, imagine if it was something crazy like 50% bullish and then maybe like let's say 30% like neutral, and then you're talking a very small amount, 20% pretty much like bearish. For me personally, that pretty much means we are in like overbought territory. We're in like gigantic, insane evaluations, and it's just a matter of time before a pullback. Now, on the opposite perspective, last year during Liberation Day, like you're talking bearishness. Last year during Liberation Day, when the major indexes went down by 20%, I went all in this stock market. I depleted my savings, my checkings. I bought over $100,000 worth of stock, hard cash. Don't invest on margin. I don't trade on margin. I just pretty much believe working hard, building cash, and pretty much investing your cash. Or if you are a trader out there, do that strategy as well. But 52% back in March, I pretty much saw, I mean, you're talking March, April. Yeah, when you have 50% in one category, you're very much near a bottom. Now, hypothetically, if we have 50% near bullish, we're very much like near a top. But understand, that's how you really got to read this data. Just because something is very, very bad, such as the bullish 52% Liberation Day, it's creating bottoms, and it's ultimately, for me personally, was an insane buying opportunity for myself and many, many others out there. People that bought the dip on many, many great companies. If you're still holding those shares, I'm still holding SoFi shares that I bought during that time. I'm still holding AMD shares that I bought during that time. crazy, right? Utterly crazy. For trade positions back then, I ended up trading Palantir on 2 accounts, had Palantir shares below $100, and then I ended up selling last summer when it was in the 160s, 170s. So, I mean, you're talking crazy investments and also crazy trading opportunities as well, right? On the flip side as well, too, if you have a time period where stocks are 50%, you're 50% bullish on here, hey, you can very much look at stocks. Like what I personally would do is look at all my positions and say, okay, some of these stocks have ran up so much. Let me take some profits here and there. The insane evaluations just don't make sense. And eventually you're going to get a pullback. And we very much did get a massive pullback pretty much ever since October, November last year on individual stocks. Obviously, the indexes have very much moved higher and higher and higher because the indexes are being led by a handful of companies, not to mention the AI infrastructure build out. So this survey is talked about a lot. It's talked about on CNBC. It's talked about on Fox Business. And it's something that I highly recommend, not a financial advisor, but if you're new to the market, I highly recommend taking a look at this and also understand how to read it, because the way that I read it and the way I pretty much use investing strategy or trade strategies is, I mean, hey, once again, if it's 50% bearish, we are in a crash, okay? I am a buy the fear kind of a mentality. I got in during Rona during March of 2020, and I made life-changing money because of that. I literally started buying stock when the market had crashed 30%. And I saw the generational buying opportunity that was pretty much there. Another generational buying opportunity, 2022, buying a load of stocks myself. Another buy the dip opportunity pretty much last year. And if you really want to go into beginning of this year as well too, sure, yeah. And then on the flip side, let's say you have this survey be like I said, 50%, bullish. Hey, the market is very much melting up. And there's going to be a tremendous amount of people FOMOing on into the market, aka newbies. I've been a newbie. I've FOMO'd on into stocks before. And yes, it does happen. But when you learn that history repeats itself and there are companies that just because you may miss one opportunity, understand other opportunities come right around the corner. Let me go ahead and show that pretty much on the charts here. So this is the Qs NASDAQ Top 100. I'm on the weekly chart here. Really do love the weekly chart. And I'm seeing really a lot of similarities to pretty much last year. Last year during the summer, we had an epic summer rip. Now, the difference between last year and very much this year is that last summer, we very much had speculative names such as SoFi busting through all-time highs. Obviously, SoFi is like down almost 50% from its all-time highs. You very much had Robinhood busting through all-time highs, Palantir, Meta as well too. You had so many companies pretty much just melting up, okay? Same thing with software companies. Last summer, it was very much a software-driven kind of like rally. Hardware, such as very much kind of like chips in a way, they were very much stagnated. AMD was stagnated. NVIDIA was pretty much caught stagnated. It was very, very different of a meltdown. But last summer, the market, aka pretty much the NASDAQ 100, which I myself and many, many other people really consider to be the U.S. stock market, is the Qs. And you notice we pretty much had a bounce from Liberation Day, a massive, massive bounce higher. And we ultimately pretty much topped. We formed, one top, and then you can say, hey, this is a double top in January, and we pretty much dip lower. Understand that there is no identical, pretty much buy the dip opportunity. understand that one pullback may not be the same as another pullback. Similarities in the stock market doesn't mean similarities by price. It doesn't mean similarities by pretty much time. You can have one pullback last 1 month, another pullback may last 2 months, but you look at similarities. That's how you read the charts. Yes, I am a fundamental analysis investor as well. And sure, yes, of course, fundamental analysis matters significantly when you take a long position. You got to know how to read the charts. A lot of investors out there, they don't fully know how to use technical analysis. They understand the basics of like, hey, if something is above the 50-day moving average, it's very much like on a bullish upward trend. But at the same time, understand if something is way above the 50-day moving average, you're essentially in overbought territory, which means you could very much face a pullback. Now, I'm not saying the market's going to experience a pullback like anytime soon, but something that very well could happen is if we kind of mirror around the same, where we pretty much see last summer, last August, we're very much above the 50-day moving average. We're actually very much more above the 50-day moving average now than we were back in August, and we really didn't push the highest up until October, where we basically pretty much topped, and we didn't break out of that until friggin' April of this year. Yeah, you're talking October, 6-7 months. It's a long time period, right? Well, if history were to kind of repeat itself in a way, and we kind of see a similar kind of like drawdown in a way, let's say maybe early next year, why would that be? Why would we experience a drawdown earlier next year? Is it going to be a trade war? Probably unlikely. Is it going to be another war in the Middle East? The market very much is, in my opinion, over Iran a little bit, in the sense that if there is military exchange, the market's not going to get fearful anymore. The market starts to adapt pretty much. When I say the market, I mean definitely algos and very much institutional investors. They start to really look at everything going on, and they're like, you want to know what? Okay, obviously it's not the end of the world. You know, the U.S. and Iran, they're exchanging fires back and forth. Afghanistan, Iraq, Vietnam, etc., etc. Ultimately, the stock market goes up, right? War is war. Unless a new war breaks out, I mean, the market's not going to really sell off over anything pretty much Iran related anymore. Obviously, oil is very much below $85 a barrel. But something that could very much cause a drawdown next year is pretty much, what if a lot of these companies that are spending a ridiculous amount of money, they're like, hey, maybe we need to not raise guidance and just kind of really see where stuff is going. That's going to throw the market into a spiral. It's uncertainty. Well, wait, what do you mean? You mean you're not like increasing your capital expenditure spending? Meta, Amazon, Google, Microsoft, that's going to be very big. That could very much cause the Qs to very much create something like this or something like this. Now, ultimately, what I would do personally is I'd be doing the same thing I did during Liberation Day and the same thing I did earlier this year. Pretty much, I would be buying stock of phenomenal companies. But at the same time, understand that it's very interesting to talk to this about to people that are not in the market, because if I were to talk to someone like at a bar or just anywhere, social gathering, right? And I'm trying to really explain that you can't go on a upward trend forever. You got to get pullbacks. Obviously, the vast majority of people know that the stock market is very rigged. It's a rigged game. It ultimately just continues to go up and up and up and up and up, right? I mean, I can show you the Qs. I can show you the SPY. it ultimately just goes up and up and up and up, right? But there's obviously time periods where the market is very much so very trading at very high valuations. The slightest bit of uncertainty can pretty much send that market down 10, 15, 20% of a crash, maybe even 25%. Same thing with the SPY. So going into midterms, it's really pretty much a coin toss in my opinion, because historically we very much have a kind of not a very well-rounded market going into midterms. It's typically the year after midterms, the pre-election year for the presidency, we pretty much see a gigantic move higher in the market. But once again, this market is very much being led by an AI build out in a handful of companies. Sure, yeah. You know, you have, it was on this video clip that I played earlier in this video, 76% of companies are beating earnings expectations, but their stock prices are performing differently. So the market is very much being propped up by this AI build out. And hypothetically, early next year, if CapEx spending pretty much gets capped, no pun intended, keep the numbers simple. Let's say you have the top companies, they're spending 200 billion this year, and the market is expecting maybe 220 or 240 billion next year. And what if theoretically a company comes out and says, yeah, we're going to stick to 200 billion? Or what if the companies come out and say, hey, we're going to start kind of really going back? You're going to see the market very much have a dramatic swing. Now, does that mean stocks like Nvidia, AMD are going to go bankrupt? This is the lie. Here's the lie. The lie is that the companies that are spending the majority of money, right? They're still going to be spending money. They're just not going to be spending as much. So instead of them raising, they either stay the same maybe, or they pull back a little bit. They're still going to be spending hundreds of billions. That's the lie. But you're going to have the chip stocks very much experience, in my opinion, volatility. Or next year, hey, you want to know what? We could just completely just blow past it and just continue to go higher and higher, right? Time will definitely tell. So a lot in this video, very much driven. Definitely check out the AI Investor survey. Add it to your list if you haven't done so. Let me know down below if you do check it out, because I talk about it a lot on this channel. Pretty much stuff that I talked about regarding the Qs, the SPY. If you definitely disagree, very much drop a comment down below. But I mean, right now when it comes to like the weekly chart, we're not at overbought. We're very much trading a little higher with the relative strength index, very much at 62. We go to the 1 day though. It's utterly remarkable because the 1 day kind of really tells a little bit of a different story here. In the sense that, hey, we're still above the 50-day moving average, but it just kind of very much looks a little weak per se. And like I was saying, the moment we pretty much get uncertainty about this AI build out, the chips, semi stocks, memory stocks as well too, it can very much go in the other direction. Stay tuned for tomorrow's video. Really no data this bit, or rather I should say, hold on, let me pull this up on the screen here. Data this week, pretty much some housing data, pretty much to tomorrow. Federal Reserve Open Market Committee, maybe we'll get some stuff there, Fed minutes. But the big one to really watch for next is going to be PCE. This is going to be next Wednesday, August 26th. PCE is another inflation report. Pretty much this could very much sway the odds of a rate hike in September. Very much we got to pay attention to that. Otherwise, hopefully all are having a great Monday, and I'll see you tomorrow for a brand new video. Later.